Hello, it's Robert Miner with Dynamic Traders Group. This week's DT trade strategies for the week beginning November 16th. This is a short, brief video that we do for our YouTube and Twitter and Traders News subscribers, giving you a little bit of taste of what we do for our regular subscribers of our DT reports, where we have much more comprehensive and daily updates on the major financial markets. So if you like what you learn here, check out our DT reports. We've got a 1-month trial available for $19. And these past few weeks, I've had a whole bunch of new subscribers and people that have at least tried the trial because they're trying to make sense of what's going on now. So hopefully we help you a bit with that. And we're as much educational as we are just trade strategies. We want to teach you how to trade. And again, we don't forecast. That's for fools. That's for losers. We don't forecast the future. Is we identify conditions with a high probability outcome. We're trading as a business with us. It helps you to learn specific trade strategies for the major financial markets. So also, if you're a YouTube subscriber and not a subscriber on Twitter, you might follow us on Twitter as well, because oftentimes, once or twice, sometimes 3 times a week, I'll put up a chart on Twitter, just kind of a quickie of a chart that's updated with some comments on it, and it might change slightly the outlook that we've got from our Saturday videos. So the trade strategy might change a little bit. Maybe we've confirmed or invalidated that potential setup. So you want to subscribe to us or follow us on Twitter so you can get those updates. But of course, if you really want to keep up every day, check out our DT reports. 1-month trial, just $19, updated every day, 2 or 3 videos a week, just a lot of information and a lot of training and education. Okay, let's get started. I'm going to go through 3 or 4 different markets today for potential trade setups this coming week and update a couple that we've looked at in the last 2 weeks. Let's get started with the ES and the stock indexes. The objective of all trade strategies is to identify conditions with a high probability outcome and then with acceptable capital exposure. So you can identify the specific price where you'd enter, you'd identify the specific protective stop loss, so you know exactly what your risk is or your capital exposure is when you make the trade, and then you can adjust your position size or the type of vehicle. Some trades may be set up with pretty minimal capital exposure, so you can, for instance, do highly leveraged futures trades. Others, the capital exposure where the stop loss is maybe need to be further away. So instead of doing a futures trade or anything else that's highly leveraged, do something like an ETF, a bull or bear ETF, where there's either no leverage or 2 to 3 times leverage, which is pretty modest leverage compared to what it is with futures trades. So whenever you have a setup, there's always an option, there's always a choice to make on what vehicle you're going to use, depending on what the volatility's been, that sort of thing. So that said, this is the ES daily data as of the end of the day on Friday. Now, on the end of last week, we had reached a position with a potential daily high, or it was near a daily high at least. A daily high is where we make a high and it lasts at least 3 to 5 days, meaning that we go, if it's a daily high, we should be sideways to down for 3 to 5 days. Sometimes it's a little bit more. We always consider at least a minimum of 3 days, and some days it's sideways, and it's not necessarily a bear trend. Well, on Tuesday, we finished that setup, meaning we had completed what we're considered a probable 5-wave advance, and we had made, it was Wednesday when we made the bear reversal. But Tuesday, we had been overbought in our daily momentums for like 3 days. So we're in a setup to identify a potential trade. On Wednesday's reversal, that was a good setup for a short trade or a bear ETF. By the close, there were some setups potential during the day as well, intraday data for those who can follow the market intraday. And so there was a good setup on the close with minimal capital exposure, a stop just above the high made on the day before, for potential at least 3 to 5 days sideways to down trade. Well, the next day, that trade was voided and it stopped out if we went short. If someone had gone short, I went short because it was a great setup following this bear reversal that's Thursday when it was made. The setup was complete on Wednesday, at least in a position to complete a minor corrective high. And then we have the lower, and I think it was actually an outside day on Thursday. Good setup, but we're stopped out the next day. Pretty small, very small loss, in fact. Where are we now with the ES? Well, again, we're in a position to make a daily high. Now, not necessarily any kind of bear trend is going to follow by any means. So what we're looking for are trades that'll last around 3 to 5 days, if not 3 to 5 weeks. Well, number one, our weekly momentum is bearish on the SPX. Made a slight bull reversal on the ES, but we Q off of the cash SPX. It's bearish, but it's pretty close to turning bullish if we were just sideways up this following week. So let's take a look at the intraday. This is 60-minute data. So here's how I'm looking at it for the first of the week. I don't know what the market's going to do, but I do know where it's at. And where it's at as of the end of Friday is it's near the 50% retracement. The daily momentums are bearish. We had an impulsive, this is for you Elliott wave folks, this is an impulsive 5-wave trend down, and it's just the 60-minute data, it's only 2 days. But then we've had a clearly defined correction over the next prior few days. So we came up here, this was Wednesday, and this was actually in a time and price zone to make a short-term top, potential corrective high, but we made an ABC correction, and then we came up and traded into the range of A. That's called an overlap. Again, I teach all of our subscribers about overlaps and how valuable they are and when they're useful for making trade decisions. So it pretty much voided the possibility of an immediate continued decline. But here we are as of the end of the day on Friday. Look at this position. If you're into Elliott wave, which I think can be really helpful for you, this is a possible little ABC correction, and then a possible 5-wave advance right into the 50% retracement. We've got 2 time factors between Friday evening, which really, since there is no trading Friday evening, this would be represented by Sunday evening into Monday morning with the potential to complete an ABC correction. And again, daily momentums, dual look back bearish from the overbought zone at the 50% retracement, and a clearly defined or a potential at least, ABC, right to the 50% retracement. So again, we're not forecasting, but if the ES were to decline below what I got labeled this little wave 4 swing low that occurred midday on Friday at 35.47.50, that would be the setup, and so we've probably completed this advance, which has probably completed the higher time frame advance. Again, not a big bear trend. This is just a trade that would probably last a few days and continue to below the November 10th low. If we trade below this, if we don't trade below this, then there's no setup. There's no reversal confirmation signal. Something else is going on. So you guys can take a look at that early this week, and if we trade below 35.47.50, is that more than likely we're going to continue to below the November 10th low. Whether we do that or not, it's definitely a setup with pretty minimal capital exposure to get on the short side, or even a bear ETF, your choice of what vehicle to use. Very quickly with notes and bonds, this is notes weekly. We're dual look back bullish from the oversold zone on notes. That's a pretty reliable signal that we're in a position to complete a weekly low, and that's a low that would last, again, 3 to 5 weeks, move in the opposite direction, sideways to up. So that's the time we want to look for a specific trade. So let's take a look at the daily data. There's our daily. Daily momentum, the 8 just made a bull reversal on Thursday, with our weekly momentums having made bull reversals last week. So that's a dual time frame momentum setup on the long side for a potential of a 3 to 4 week net bullish trade. So you might want to consider that. And we're just 2 days off of the low. So it's just probably in the initial stages. Could be wrong. And that's what stops are for. As long as the market, this is notes, hasn't closed below 137.14, we're in a position for a long trade that would probably last, excuse me, 3 to 4 weeks. Net, net sideways to up. So here's gold weekly, and for at least 2 to 3 or 4 weeks, longer than that actually. Been looking to get in a position to when a weekly low might be complete, and then a specific trade strategy to go long. And again, let me put my cursor on. This is the prior week, and boy, that looked like a real breakout that we had made the prior week. The reason I hesitated on a specific go long recommendation you'll see in a minute, because the daily momentums were overbought even though we made that breakout. So we were looking for the potential to get long this past week, as long as, let me go to the daily, as long as we had not closed below 1868. So here we are. This is that prior week we made the breakout above this high, but our momentums, daily momentums, were reaching overbought on that breakout, which means the upside would be pretty limited, and we were very close to making a daily high followed by 3 to 5 days sideways to down. And of course we had this terrific reversal on this past Monday. And what did we do? We closed below 1868. That voided the go long setup. And again, we don't forecast, we identify trading opportunities. So the immediate go long setup is voided. And why is that also? It's because our weekly momentums on our DT oscillator, which is very useful, particularly when we use the dual look back, both the 8 and the 13 made bear reversals on this outside bear day this past week. So more than likely we're going to be sideways to down for at least another week or two. But here's my warning for you, or what I want you to keep alert to, is that this is definitely a corrective pattern. So we continue to look to identify the technical position when a correction is complete. More than likely it's not yet complete. A week ago, it looked like it might be, but now with this past week, it's probably not, so there's not a specific go-long setup. But I suspect within the next 2 weeks, we're going to have that setup. So here's the thing to keep in mind. The longer this is in this choppy, complex correction, is more than likely the stronger the breakout when it comes. So it's not in a position right now or in the next few days for the long trade, although the downside is probably really limited. When I say we're going to be sideways to down for a week or two, that doesn't mean a real bear trend. In fact, here's probably around the extreme on the downside that's probable. Let's just use that once, about 1800. That's probably about the limits on the downside even if gold continues sideways to down before we complete the weekly low. So again, I'll be keeping up to date on this, and of course with our subscribers on our DT reports, you might want to check out just to be on top of this over the next 3 weeks, because when this setup comes, I think it's going to be a really good one. What I'm trying to avoid is getting into the market too early, getting frustrated with getting stopped out, and then maybe not recognizing the next high probability setup that's made. I think it's going to be a week or two, but I think it's going to be a great opportunity that you're going to want to take advantage of. So here's crude oil, and crude oil has probably completed an ABC correction right around the 50% retracement. That's 100% alternate price projection of wave A. And then we had a weekly momentum bull reversal. So everything is in place to have completed an ABC correction. If you're not already long, here's the setup, because we probably going to be net bullish for another 2 to 3 weeks. But again, we don't want to forecast, we want to identify a trade opportunity. This is the daily data, and the daily momentums made dual look-back bear reversals last Thursday. Probably going to be sideways to down for at least another 2 to 3 days. But here's the setup, and this is again why we want to trade, not forecast. If we make our next momentum bull reversal, and crude is not closed below 37.14, the minor swing closing low of November 6th. If it's above that level, has not closed below that level, and we make a bull reversal, which should complete a minor correction, that will be a dual time frame daily weekly momentum setup to continue the bull trend, potentially to well above the November high. And that's probably going to be made, that trigger and that setup, it's probably going to be made before the end of this coming week. So again, I don't remember the last time I had this in one of our Saturday videos, but I think it was on this day or the day after I put up just a chart on our Twitter with the comments that we've probably completed a wave C low, and technically we're in a position to continue the advance. And then of course this past week when we took out what I got labeled as a wave B high, that's what we call a bull continuation signal. So we're looking for the next opportunity to either enter or add to long crude trades. And of course, you don't have to do futures. There's a lot of stocks that are sensitive to the price of oil. They trend with the price of oil. And there's also ETFs that trend and reverse right along with crude itself. So lots of opportunities if we fulfill this setup in the next few days. Well, that's it for today. This video is a little longer than normal. I really hope you'll join us, our DT Reports community. If you haven't checked our reports out, that's just $19 for a 1-month trial, and we'll keep you up to date every day. That's it for today. Wear your mask, be nice to folks, keep healthy, and I'll be back with you next week. Take care.